My name is Norm Volsky, your host, and this is the Digital Health Heavyweights podcast.
Thanks, Norm. It's an honor to be here, and it's been fun to work with you over the years.
The Digital Health Heavyweights podcast with your host, Norm Volsky. And today it is my honor to introduce a general partner from Semper Virens, one of the top early stage VC firms in the market. And introduce Allison Baum Gates, who also wrote Breaking into Venture. Yeah, welcome, Allison. So, I'm a big fan of your book. You were nice enough to autograph it for me last time we saw each other at Transform. So thank you very much for that. I think a lot of what we're going to discuss is going to really come from the book and, topics you shared. So the question everyone wants to know that, is in my audience is just walk us through how you entered the venture capital world, because that's what a lot of your book is about and, how others can break into the market.
Entered venture from a slightly, different perspective. First of all, I was living in Asia at the time, which is fairly unique. I started my career at Goldman Sachs, got some great kind of financial experience, understanding of how the markets worked, and then left and joined a venture-backed startup based in New York called General Assembly. And General Assembly was really pioneering the future of work by first creating a physical space for entrepreneurs and technologists to gather in New York City, and then offering both part-time and full-time programs, training professionals in the in-demand tech skills that they weren't getting in traditional education. So web development, digital marketing, user experience. And I knew absolutely nothing about venture capital when I joined the company, was just passionate about the mission, found the opportunity through my personal network. And as I joined the company, learned that we were venture-backed, and that meant we were growing very, very quickly. So got to experience getting the business off the ground, raising several rounds of capital from some big name investors. And then I moved to Asia, launched our business in Asia because we had global ambitions. So set up shop there, and over time, saw how big of an impact our investors had on our business. I think when you're an employee at a startup or a customer of a startup, you often think the CEO is the final decision maker. But in fact, actually, the board and the investors often own more equity than the founders, and they are really empowered when it comes to setting the direction and defining success for what the business looked like. So once I figured that out, I really wanted to be on that side of things, setting the direction as opposed to being told what the direction was. And ended up getting an extremely lucky opportunity to start a fund with a partner who had been doing quite a bit of angel investing. And so we kind of set up a fund called Fresco Capital, built a thesis, thought about what our strategy was for accessing great deals, analyzing which ones to pursue, and then ultimately adding value. So we really focused on the future of work, but also helping companies expand internationally, since operationally that was what I had just done. So that was really my entry point into venture. I think like anybody's career, you look back on it and you realize how much of it was timing and network and how lucky you were. But I think getting a foot in the door is only the first step. What you do with that opportunity is really the next step. So
that's great.
To share more there, but it was a journey for sure.
Yeah, I love it. There's many people I talk to constantly that are like, oh, I would love to eventually work in venture. What would be your advice for folks that maybe come from the software vendor world, and how do you make that transition?
Well, my first piece of advice is think about how you're investing your time. Everybody thinks that, in venture, in order to break in, you need a track record. And in some ways that's true, but there are ways to build a track record besides just investing money. So figuring out what kind of companies and founders are you building relationships with, invest time in getting to know them, get, invest your time in cultivating your network. Invest your time in understanding what skills are required to be successful in venture. Obviously I'm a little bit biased about my book, but spending time understanding how the industry works is really important if you ever want to break in. So I think really starting from there is how can you build a track record of attaching yourself to successful entities in venture, particularly around companies, whether you're working for a company, you're consulting for a company, you have equity in a company. That's a really great place to start, because at the end of the day, all venture capital funds are looking for access to great deals. And if you can provide that access, that's the first step.
Yeah. And if you want a step-by-step guide, the book is really, really helpful. But I wanted to just give people a little bit of a taste on, what your advice would be. And if they want more detail, they can read your book. So kind of walk me through why you feel like it was a great move for you to join the venture world, and like, what do you love about it?
I really believe venture is one of the most incredible jobs out there. When you look at the companies, products, technologies that are having the biggest impact on how we live our lives, how we find work, how we do work, how we eat and date and get our healthcare, those companies are all venture backed. Yep. And so to me, in terms of having scalable impact on the world and how it's changing, venture is really at the heart of it, and punches way above its weight class when you look at how small it is as an asset class and the kind of influence it's having. It's very disproportionate. And so for me, that's a big part of my motivation to be in venture capital. But besides that, I think there is a certain personality type that is suited for venture.
Yeah.
One of the reasons why I love the industry is because of the fact that you can build a portfolio. I found it challenging, stressful, limiting to be working on only one company. And the idea of having an entire portfolio, a bunch of different types of ideas, diversified levels of risk, that was and is very satisfying to me. I think that is definitely part of my personality. My husband is a founder, and to him, the idea of having more than one thing that he's focused on is extremely stressful. So I think, there's different types of people. And I think the other thing to flag is that within venture capital, there's a huge difference in the types of roles that are available. Yeah. Obviously, an investing role requires a financial background, an understanding of metrics, portfolio construction, et cetera, et cetera. But there's also incredible opportunities to be on the platform side of venture, where your primary focus is really adding value to portfolio companies, building networks, and communicating to different parts of that network. There's also, finance or legal roles in venture where you're on the operations team and you're kind of keeping a fund up and running. There are talent partner roles where you're focused on working across the entire portfolio and making connections there. So there's a lot of different
of those.
Exactly. So there's a lot of different flavors of it. But I think the key is really being excited and inspired by how technology is changing the world and the idea of working with a lot of different types of companies at once.
You mentioned like there's certain personalities that do better in venture. Like what types of people would you caution before, entering venture? Like what are the things that you've seen like over the years of people or, personality types or people with certain skill sets that have struggled?
I don't necessarily think there's one personality type that struggles, but I think if your personality type is one that doesn't work well in a team, that's where you can have a big challenge. Insofar as nobody can provide a company with everything that they need.
Yeah.
And so you do really need to work with people that are product oriented, and understand how to build things that people love. But at the same time, you have to work with people that have a go-to-market sensibility and understand that sometimes the best product doesn't always win. And you have to think about sales and growth all the time. You also need people with truly tech backgrounds that understand, the very details of the products that are being built and what differentiates them in the market. You also need people with super financial points of view. So I think it's really about having empathy and the ability to communicate and connect with people that are different from you, that will set you up for success in venture. I do think for the most part, being network driven is really important to venture capital. I talk a lot about this in the book, and I've identified with being an outsider in the venture capital community over time. And what I've realized is we do need more types of people to break into venture, but we also need to acknowledge that because it is such a risky business and there is so much uncertainty, the exclusivity that exists in venture is a feature and not a bug.
Yeah.
Because when you invest and work with people that you know, that you have a track record of trust with, you're able to reduce some of the unknowns that exist. And it's really the only way you can navigate a world of such drastic uncertainty. And so I think you have to be okay with that and acknowledge it and understand how to navigate it if you want to succeed.
That's great. So in the book, you describe 3 A's: access, analyze, add value. If you don't mind, we'll go through each. And I just want to get an idea of how you think about and how you've, done a good job in your current role of, getting access to deals, analyzing deals, and adding value to deals. Because, those are the 3 cores of what it takes to be a great investor, in the book. So kind of walk me through how you get access to deals and how that set you and Semper Virens up for success.
Definitely. And before I dive into access, I want to take a step back and also just emphasize that, this book is about venture capital, but ultimately this is understanding how to access great opportunities, how to analyze which ones to pursue, and how to add value once you're there is a mindset and a framework that works for any career path.
I would agree. I read it and I had so many similarities between my recruiting business, which was a services business. So I would say just about anyone in business, that's working with other groups, and has an ecosystem that allows them to be successful. I think it's incredibly valuable.
Absolutely. And the opportunities that are most likely to be successful inherently are not accessible to everybody. So understanding sort of how to get in front of that, I think, is really important. So for us, when it comes to accessing great deals, the first is just thinking proactively about our deal flow. I think it's easy to take for granted, no matter where you are in your career or, how much money you have, kind of assuming naturally you're fantastic. Even if I don't know you, I'm sure you're number one at everything that you do. And so the expectation can be that opportunities should be coming to you. But the reality is that you really need to go find them and take a deliberate approach to making sure that you constantly have a pipeline of potential opportunities, whether it's projects, investments, companies, people. And that involves, one, thinking proactively about where you're investing your time, and really focusing on building relationships with what I call high quality connectors.
Yeah.
So people that are in the world that you're looking to spend time in. Some examples in venture capital would be, people that work with startups, either as advisors, angel investors, professors, vendors, that come across a lot of founders and know how to evaluate which ones are most likely to be successful. Those are great people to spend time with. Other venture investors that are complementary to you. So whether they're a slightly different stage focus, or, certain geographic focus, building relationships there. Accelerators are also a great way of getting access to great deals, but just thinking very proactively about how am I investing my time and what return on that investment am I getting in terms of actionable opportunities is a really big step toward making sure that you get great access.
I love that. And then a couple other principles that you mentioned in addition to where you invest your time is, network trumps knowledge, as well as investment thesis is the foundation for success. Can you just touch on those 2 ideas briefly?
Talked about exclusivity in venture as a feature and not a bug. And I think I'm sure many of us heard growing up that it's not what you know, it's who you know. And that is absolutely the reality. You can know absolutely everything there is about a sector, but unless you know who are the right people building in that sector, you're not going to find great opportunities. So I think just focusing on people and those high quality connectors is really critical to success in terms of getting access to the opportunities in the first place. And by the way, when you meet a company, that doesn't necessarily mean that they're going to work with you, right? So you also have to have something that differentiates you, a very articulate way of representing who you are, why you're the right person to be working with, and how you might be able to add value is really important to cultivating that network. So I share some tips in the book around how to build that network in a productive way. And there's some simple things that are not that hard to do that I think can make a big difference in terms of actually helping relationships yield opportunities.
Yeah.
And then from an investment thesis perspective, you don't have to be an investor, but you need to have a view of what the future will look like.
Yeah.
The reason I focus on the future of work is because I grew up watching both my parents' jobs being disrupted by technology. And that was very stressful. I saw it starting to happen to me in my very early career at Goldman Sachs, even though I had spent my entire life, I went to Harvard. I spent my whole life trying to avoid this situation. It was happening to me. And that really helped me formulate my view of what the world was going to look like in 5, 10, 15 years. And that drove the decisions that I made about my career of wanting to be in and around technology so that I could be the disruptor and not the disrupted. So I think even before venture, that's an example of figuring out where you're going to be spending your time and what opportunities you can filter through immediately, where, if something is not in line with what your vision of the future looks like, you can reject it out of hand. So I think, you're going to find what you're looking for if you know what you're looking for.
Yeah.
So you need to figure that out in the first place.
Yeah, I love that. I think like the investment thesis piece, I think that's in any business. Like if you're really specialized and you just stay niche and you're really good in that niche, you're better off than just being like a master of none, jack of all trades. So I think that's why your firm's just done a tremendous job and has a tremendous reputation. For all of our viewers and listeners that don't know, kind of walk everyone listening through what Semper Virens investment thesis is, what you've done so far that's been ultra successful, and why up and coming companies within either digital health or HR tech would be, lucky to have you as an early investor.
Semper Virens is in a lot of ways a very thesis driven firm. We focus on B2B healthcare, workforce, and fintech companies. And our view of the world, our investment thesis is that we are in the midst of a fourth industrial revolution where work is becoming digital, it's becoming distributed over space and time, it's becoming data driven, and it is incredibly dynamic as a result of all of those things. And at the core of every industrial revolution has been the relationship between employers and employees.
Yeah.
And as work is becoming digital, distributed, data-driven, and dynamic, that relationship needs to be restructured because the systems and infrastructure that exist were built for a previous way of doing work. And when we think about that employer-employee relationship in the US, people get their jobs from their employers, they get their healthcare from their employers, and they get their money from their employers. So investing in each of those sectors, this relationship between employers and employees is a really exciting place where technology can not only transform that relationship, but rebuild the infrastructure that is necessary for it to thrive. And that's what drives what we do at Semper. What's unique about our platform is that we run a community of end customers for portfolio companies. So in healthcare, workforce, or fintech, if you're selling B2B, we have a relationship with your customer. It started with a network of employers. We run a community of about 150 senior HR leaders at publicly traded companies. And then we also have deep partnerships with insurance carriers, health plans, hospital systems, and brokers and consultants. So that ecosystem of end customers allows us to access great deals because we're able to hear from multiple parts of the ecosystem what are needs, what are new solutions. We look at about 1,500 companies per year from those various sources. It allows us to analyze which ones are likely to be growing significantly in the near future in a really efficient way. On average, we talk to about 15 potential customers of a company before we make the decision to invest. So we really understand what are they looking for, what problem is it solving, what does the budget look like, and how is it going to change over time. And then after we invest, we can very clearly add value because we're actually helping accelerate go-to-market and distribution. So I think that's what makes us really unique. And it does certainly narrow the scope of what we spend our time on, but you'd be amazed at how much opportunity there is in just these three sectors, given how much change is happening in the world right now.
Well, I wouldn't be amazed. I know there's a lot going on, and a lot of opportunity, but yes, the average listener, maybe, they would be a little bit surprised on how much, can be done in this very confined market. And yeah, I think, that's why whenever I come across a really interesting early stage company, I always tell them, like, you have to talk to Semper, because I think your firm does an incredible job of adding value post-investment. And I think, that really is a nice secret sauce of yours. So walk us a little bit through more how you analyze these companies. You mentioned you have them talk to on average about 15 potential customers. But what else do you do to analyze these deals?
One of the biggest challenges in venture capital is that there is unfortunately a difference between a great company and a great investment. So we are privileged to be able to spend a lot of time with incredible companies, but then the next order of analysis is this actually, a high quality investment? And in order to do that, we look at what we call the 6 T's. So we have team, who is the founding team, what is their skill sets, and most importantly, do they have experience with the problem that they're solving? We look at technology, we look at total addressable market, how big can this company actually get? We look at terms, so how much of this company are we actually going to be owning as a result of our investment, and what does that mean on the exit? We look at traction. So I think we have a little bit of a unique framework when it comes to actually evaluating an investment, but we have a very concrete process that we outline. And this is something that I really recommend for anybody, even if you're not an investor, of creating your checklist of what needs to happen for us to invest. Because one, I think, checklists have been shown to improve even things like health outcomes, to ensure that you don't skip over any steps. And two, it allows you to, what I call, check yourself before you wreck yourself. So the reality of making any kind of analysis is that you're subject to your own biases. And in venture, when you talk about mission-driven businesses that are changing the world, it's so easy to get swept up in, the potential and the vision and everything that could be possible. And so having that distinct process and checklist for yourself to say, have I gone through all of the steps that I've outlined to ensure that I'm analyzing this objectively and understanding not only is this a great thing, idea, opportunity, but is it the right thing, idea, opportunity for me?
Yeah, I love that you quoted the famous philosopher Ice Cube on your checklist. It's great. And then walk us through adding value. I think what Semper does better than anyone is adding value post-investment. Kind of walk us through, in addition to introducing them to potential customers, like where else you've provided a lot of help and guidance and, getting a company headed in the right direction.
Adding value is something that is incredibly personal. So I think it has to be authentic to your background, your skill set, and what actually gets you up in the morning. So no matter what your strategy is, it's about kind of being true to where you're able to genuinely contribute to a company's competitive edge. One of the reasons why venture capital is so fun is that it's private equity. And so you can actually influence the outcome of the companies that you're investing in, working for. That's just not possible in public markets. So, you have to take advantage of that.
Mm-hmm.
I think one, if you're going to set yourself up for success long term, where you can continue to get access to great opportunities. But two, like if you're not doing that, then you might as well be in the public market where you're, just kind of taking a job or working or trading a stock.
Mm-hmm.
So adding value, we kind of think about venture capital as going through somewhat of a transition as well as an industry.
Mm-hmm.
We think of VC 1.0s sort of in the early 2000s when venture capital was just getting started as an asset
Mm-hmm.
class. And it was really, you could manufacture a company's success purely by capitalizing them.
Mm-hmm.
Capital for disruptive technology was relatively scarce. And so, therefore, the companies that had the resources were more likely to succeed, provided they were in the right market.
Mm-hmm.
As the asset class grew, there were more types of venture investors and capital started to become a little bit more of a commodity. Then you saw the emergence of VC 2.0,
Mm-hmm.
funds like Andreessen, this idea of a platform approach where
Yeah.
venture capitalists could provide not only capital, but also the resources that people need to build a company. Access
Mm-hmm.
to talent, access to financial modeling, access to marketing resources, access to PR. These things are the same across every company.
Yeah.
And funds could help accelerate the process of building the company itself. We believe that has been somewhat commoditized as well, as
Yeah.
every fund has a platform approach. And we see VC 3.0 as much more of an ecosystem approach,
Yeah.
where you're providing relationships and support outside of the four walls of the company.
Mm-hmm.
For us, that's very specifically around go-to-market and distribution. To date, we have a little over 50 portfolio companies, and we've introduced them to more than 2,000 customers
That's
in
incredible.
aggregate.
All you
So,
founders, like write that down, remember that. And regardless of if it's the best terms, I would argue there's no better partner to invest, have invest in you than these folks.
well, thank you. I think, whether you're selling to employers or health systems or payers, you know, getting your foot in the door actually is a big challenge, and
Huge.
getting in front of the right people can make a really big difference in terms of sales cycle consideration, feedback on your product, et cetera. So that's where we focus our go to market. Our team has been building relationships and building an ecosystem in
Mm-hmm.
this space for well before the fund existed. The fund
Mm-hmm.
has been around for about 5 years, but we've been operating in this space and investing in the space for more like 20 years.
Yeah.
And so it takes a long time to build those relationships, but ultimately we see that ecosystem approach, that adding value by making connections outside of the company, is really where the industry is going.
And there's another concept brought up in this, chapter around prioritizing winners. And I think it's a really important concept in all business, but can you walk us through what you meant by that in your book? And then I'm going to relate it to just general business.
In venture capital, a fund typically has about 20 to 30 companies in it. And as a result of this diversification, there is a concept called a power law, which is that the majority of the results are driven by only a few of those companies.
Yep.
So what a lot of people don't realize is that within a venture capital portfolio, as investors, we expect about a third at least of those companies to go to zero.
Mm-hmm.
And in fact, our results are better if all companies in the portfolio go to zero, except for one that does really, really well.
Yeah.
Versus every single one doing okay.
Mm-hmm.
And there's some examples of the math, because that just exponential growth is not intuitive. But I think what that means is that part of the challenge is not necessarily just around your dollars, but it's about how do you invest your time, and how do you make the companies that are already successful even more successful,
Mm-hmm.
versus trying to save the ones that are more like a 0 or a 1. So
Mm-hmm.
it can be very counterintuitive, because the opportunities that are very problematic are the ones that end up naturally stealing most of your time and resources and energy.
Mm-hmm.
But in reality, that's very unlikely to make a difference in terms of your long-term success. So there's an art to figuring out how to manage your time and treat everybody with respect, regardless of whether or not your incentives are still aligned. But as an investor, or even as a vendor or an employee, figuring out when to move on and where to focus your efforts is really going to make or break you in this industry, because you will always, if you're doing well, you will always have more opportunities than you have time, capital, energy, resources. And that's also driven by a concept called preferential attachment, which is part of this really cool new emerging part of science called network science. But this idea is that when there is no clearly objective measure of success, networks drive success. And what that means is if somebody says you're successful and there's no way to prove that wrong, you are more likely to become even more successful. So you see this in sports, you see this in acting, you see this in, virality in social media, that once something gets a little bit of momentum, it will continue to build momentum because people, opportunities, resources are naturally drawn to things that have the appearance of success. And so I think understanding that dynamic, although it can be somewhat disillusioning, if you look at it with a purely objective lens, but I think knowing how to manage and navigate that dynamic and make it work for you is something that's really important if you want to succeed in any network-driven business.
Yeah, and I think like that, prioritizing winners, it's a good lesson just in general in business around just like getting your priorities right is always the key to success. Like if I'm going to invest this much time into this and I'm going to get the most bang for my buck, so to speak, in the time I spend improving in this skill or getting trained in this or investing in a couple of my top employees and hoping they, blossom as opposed to giving everyone equal resources, equal training. There's just so many examples of just like knowing where to invest time, resources. And if you do that correctly, you're going to have, better than average results in a lot of things. So
and it's true in the ways in which you decide to add value as well. Focus on winning strategies. If something is clearly adding value and you enjoy it, do more of that. I think we kind of learn from a very young age that we should be spending time on the skills that we're bad at. And I just don't think that's true. I think we should be working with people that are good at things that we're not, and we should be focused on getting better at the things we're already good at.
Yes, I would wholeheartedly agree. You mentioned there's the 6 T's, but I think the one that probably is a little bit more important than the others would be that like team one in terms of like the founder. Like I think a great founder can cover up a lot of other warts potentially. Ideally, there's no warts across any investment, but there's always going to be advantages and disadvantages. When, everything else is equal and you're just really focused on the founder, him or her, kind of walk me through what you look for in founders. Like there's a lot of founders that have been successful. None of them are exactly alike, but what are the ones that are successful usually have in common?
First thing we typically see is something called founder market fit. I think in a lot of startup vernacular, you hear about product market fit, which is also important, but getting to product market fit is a lot easier if you have founder market fit. So does this founder have experience with the problem that they're solving? And do they have experience with the customers that they're selling to? And I think that is just as important. When you look in sectors like healthcare, like the workforce, like fintech, I mean, we've all made money, we all have jobs, and we all have health and have to navigate the healthcare system. And while that is incredibly valuable because it means that these sectors touch everybody's lives, I think it can be a little bit deceiving to founders who think because they've had a health problem or because they had a bad boss or because they've hired a couple of people that they know how to build a really big business in this space. So we often look for, do founders know the customers that they're selling to? Do they understand what they need, what they want? And do they understand how to navigate building an organization that can scalably sell their solution to that market? So that's really important for us. Different types of investors might value different types of founders, I think. And there's also a filter of what kind of founders resonate with me personally. Like we work with a lot of large corporates that are looking to partner with startups. And for them, they often have an additional filter of like, has this founder worked with a big corporation before?
Yeah.
Because if not, then they're probably not likely to be successful in this partnership because they don't have the right expectations. So there's always that additional lens. But from an investment perspective, we're typically not investing in deep technology where the innovation itself is a new approach to technology. It's more application layers where we focus. So looking for founders that have real like sales experience, kind of selling technology into the type of customers they're looking for. Something that's really important to us.
Yeah, sadly, healthcare is usually not the first place innovation happens. It usually gets it a little later in specific new technologies growth curve. And then walk me through what your advice would be to founders before they go into a pitch meeting. You've seen thousands of founder pitches over the years. Walk us through some things that you highly recommend founders do and maybe some things to obviously avoid.
My number one recommendation is know who you're talking to. Similar to sales, how you qualify a potential investor is perhaps your most important step in the process so as to not waste your time. Do they focus on the stage that you're at? Do they focus on the sectors that you're at? And have they invested in any competitors? I think often founders will look at a portfolio and say, oh, good, they invested in a company that's like me. But in fact, that actually prohibits a lot of funds from investing in you. So find out beforehand if you're likely to be a fit for that particular investor. Second, also understand, where does this person rank within their firm? Are they a decision maker? What do they do? I think we get a lot of founders reaching out to our platform team, which is great because we love them and we want them to have those connections. But if you're looking for an investment, you need to be talking to someone on the investment team, or else you're just creating more steps for yourself in the process. Third is get a warm introduction, network-driven business. So having contacts and people, organizations in common can be really, really powerful for setting yourself up for success heading into the meeting. So those are just a couple things in terms of the first step. And then the other thing that I really encourage founders to do is to be in control of the conversation. Know your time. How much time do you have with the person that you're talking to, and how do you manage that time effectively? Because whether you realize it or not, a lot of VCs are kind of testing you and looking at how you spend that time, how you can control a conversation, because they're going to see that as a proxy for how you approach customers or potential employees. So I think that's a big piece of advice that I have. And then finally, be specific. I get a lot of founders pitching us on why healthcare needs to be transformed. I know that already. You don't need to convince me of the problem. What are you doing about it? What does your product do? Who are you working with? How far along are you? Give me examples. Be very concrete, because we're all in the business of changing the world, but what does that actually mean is really the most important thing that I think investors are going to want to know from you.
Yeah, that's great. So a lot of folks are probably wondering, what's your take on the current environment? Is, in your book, you mentioned, the concept of dry powder. I think there's a lot of dry powder in the VC and PE worlds these days. How are you and your firm currently, evaluating investments based on where, the market is, where interest rates are? Like, kind of walk people through like why there's been a little bit of gridlock in the investment community and what you see and what might change over time.
So much of the last era of venture that we've been a part of has been driven by 0% interest rates.
Yeah.
And when interest rates are zero, it basically means there is no difference in spending money or investing money today or in the future. And so what that meant is that companies were willing and investors were willing to put any amount of money behind growth and really prioritize growth over profitability. And that led to some incredible businesses being built incredibly fast.
Yeah.
But as that has slowed down, as interest rates have gone up, that has made money more expensive. And it means that spending money today versus in the future is not equal.
Yeah.
And therefore growth has slowed down. Investors have also slowed down their deployment. When you think about the interest rate is what you can get from just putting your money in a savings account. If that's zero anyway, you might as well go spend that money and invest that money in whatever you can. But today there's actually a real opportunity cost to putting money into venture or into whatever you're doing. And so that's been driving a lot of the slowdown in the market. So there's a natural level of caution of changing the way that we value businesses that happens in that kind of environment. But it also leads to, I think, a really exciting time where you can really start to see long-term mature businesses emerge. It's a lot easier to tell if a company can grow profitably over time. It's a lot easier, it's like everybody looks good when everything's up and to the right. And now the winners are really emerging. And some of that is within your control in terms of how you manage your cash flow and how you execute. And frankly, some of it is not within your control of what is the timing of the market, who's buying what, and when did you fundraise last, and at what valuation. And, those things are either going to set you up for success or not. But we think there's some incredible opportunities to, one, actually differentiate which companies are likely to be successful and sustainable over time. And two, looking at new businesses that are being started right now. I think in a little bit more of a recessionary environment, people have fewer options about what they're going to do. And so you see a lot more people willing to take a risk and go work at an early stage startup or start a business instead of sitting at their cushy job in tech. And so that makes us really excited for what's happening right now. So it's definitely an interesting time, but we're optimists. You kind of have to be in venture capital. And we're really eager for what's being built right now.
That's fantastic. Do you see as, the workforce develops that it's going to get easier and easier over time to break into venture as opposed to it being like it used to be and sometimes still is now where it's like you have to know someone to be able to get in?
I think it will absolutely become easier because there will be more and more examples of people that have taken alternative pathways.
Yeah.
Part of my goal of sharing my story in the book, but also sharing the story of the other incredible investors that I interview, is highlighting stories of people that come from unexpected backgrounds. That you don't have to have, a traditional venture capital perspective. It still takes a lot of work to break into the industry. And I don't think it will ever be, a purely open game just because there's limited slots. And like I said, the exclusive network driven element of the business is a feature and not a bug. It's how we control risk. And we need that in order for it to continue to exist as an industry at all. But I think there will be more ways to stand out from the crowd, and more examples of people that have done that.
Any success stories of companies you've worked with that you're able to share, of like the ones you've looked back on the last, handful of years you've been at Semper and been like, hey, that was like one of the highlights of my career, is like doing this or adding value here or working with this founder?
Oh my gosh, you can't pick your favorite children.
That's fair. All right.
I think one of the most exciting things for me has been being able to witness several, not just one, but several companies that have gotten timing right. In healthcare specifically, I think Spring Health is a great example. We also have Brightline and Path in our portfolio that have been providing mental health solutions for employers. And we have seen how, as a result of COVID, that trend has been accelerated. And it's not only because of how employers are thinking, but it's also because of general cultural zeitgeist, where you've had, athletes and celebrities come out and say, yeah, mental health is a really big issue. And I've struggled with it for many years. And that has really normalized those conversations, I think, faster than we ever could have expected.
Yeah.
We're seeing similar movements in women's health. We're a big backer of MIDI Health, which is virtual care for women in midlife. And even 10 years ago or 5 years ago, talking about menopause was incredibly taboo. I talked to my own mother, who never acknowledged that she even went through menopause or that she had any symptoms, because you don't learn about it. Your doctors don't know about it. And there's really no way to get care. And we've seen that also shift dramatically, not only because of solutions like MIDI, but also because Oprah is talking about it. And celebrities are talking about it, and all of a sudden there's this acceptance of, it's okay to talk about being in menopause, it's okay to ask for help, and it's okay to expect more from your care providers. And so MIDI is an incredible solution with an incredible team, but they also have seen these tailwinds from this cultural zeitgeist that I think is really just lucky to get to see as an investor.
Yeah, those were huge themes in the book, is the cultural zeitgeist piece and timing. Like, you can have the perfect idea, but if it's too early or too late, it doesn't matter. It's like, can you time it right where what you are offering is not only, really helping with a specific problem, but is like the market ready to adopt that? Or, is it, a great idea that maybe won't develop for, years or even a decade plus? So that's super helpful. So, this is the Digital Health Heavyweights. I ask everyone at the end of each episode, what do you do personally to kind of practice what we preach, stay healthy, stay fit? So, what do you do from a, exercise regimen, or what do you do to kind of like manage stress in a very stressful job?
I go to the gym every day. Some
Every
days,
day, even with a
every
young
day.
kid? That's impressive.
Yes. Make it a priority. There are some days where I don't even sweat, but I get up and I do it. And that makes a really big difference for me, not only from a stress perspective, but also the fact that we're like sitting in this room, many days in our own homes. And it's very difficult to get the amount of steps or the movement that you need to feel healthy and grounded. And so making that time every day in the morning, even though it is a Herculean task with a young kid, negotiating with the people around you to figure out how to make that happen. And anybody that doesn't want to make that happen for you, I think that can be a difficult dynamic. And so just asking for that is something that's been important to me, and I think has been a big part of the fact that I'm still somewhat sane.
That's good. That's good. I'm glad to hear that. And then any popular healthy recipes in your household that helps you just, stay sharp, between the years?
We just bought a slow cooker, so I'm a little biased towards slow cookers, but really big into chili in the winter, in particular, turkey chili, chicken chili. It lasts a really long time, very practical, easy, hard to screw up. And most people like it.
Yeah, no, that sounds delicious. I'm getting hungry just thinking about it. But it is always really, really good to have something in the fridge that's just like easy and tasty and healthy.
What's your recipe?
I make a lot of homemade hummus. That's one of my top ones. I've been making a lot of like squash, like butternut squash or acorn squash based soups that have been really tasty. I have like every legume imaginable in my pantry. So we make a lot of, stuff kind of last minute that just kind of puts together whatever's in the fridge and some bean together. And usually it's some good stew. So we just try to constantly eat pretty healthy, and helps us perform better and sleep better and, a lot of things. And we need a lot of energy ourselves because we have a 2-year-old. So we're just trying to keep up with Mila all the time.
Totally. I hear you.
Yeah. So again, Allison, thank you so much for joining us on the Digital Health Heavyweights podcast. What you and your team are doing at Semper Virens is just incredible. And again, I know our viewers and listeners are really appreciative of all your insight on the venture community and what it might take to be able to, enter this market if it's something, that they're trying to achieve in their career. Again, for anyone who's interested in the book, Breaking into Venture by Allison Baum Gates. And again, Allison, thank you and appreciate you being on the podcast.
Thanks for having me.
Excellent. Thank you so much. Thank you for joining. Please like, comment, and subscribe below if you enjoyed it.